If you're an investor in the stock market, here is the update you need to know. Hello everyone, welcome to Stockertim, the investors channel. Today we want to actually bring you what you need to know in the stock market as to if the storm is really over. And what do I mean by the storm? Is the stock market sell-off over or not? Or are we just having a head fake where we think we are moving forward, the market is recovering, and we lose everything again? Give me about 10 minutes of your time now, and I'm going to actually break everything down. Thank you so much for joining us. Just before I go ahead, every information shared on this channel is for information and education purpose only. Do your due diligence or consult your financial advisor before making any decision. So, yesterday we had a flurry of news that actually broke in the markets, and we seem to be having some positive sentiment. But I'm going to actually break all of this down so that we don't get the wrong information and we don't also make mistakes. You don't make mistakes as an investor. You need to actually decipher the noise from the substance. So come with me. So the first news that broke the tape yesterday was the U.S. Treasury Secretary Scott Bessent, who said that he expects the China-U.S. trade tariff war to actually de-escalate, and that the escalation and the standoff is not sustainable. So give or take, it is now very, very clear that the U.S. and China can no longer actually continue to escalate. They've come to a point where they are now both very, very, at the tail end of the strategy they want to, the US has imposed, 45%, China retaliated, US imposed another 120 something percent, China retaliated, the US, increased, the US stopped, NVIDIA chips being exported to China. China also retaliated by stopping new Boeing planes from, being exported to the US, to China. So, yes, so what this actually means is that the escalation is no longer sustainable. And, Bessent even said in that private meeting that the sky tariff is unsustainable. So, as for you as an investor, do you actually think this is something you can bank on? I will explain further, but just to take the Treasury Secretary's word for it, one of the quotes that he made in that private meeting is that no one thinks the current status quo is sustainable. The tariff war is no longer sustainable. And, he said we have an embargo now on both sides, right? So is this a capitulation for Trump? But should we be more interested in whether Trump is capitulating or Trump is now walking back, is tough talking and is backing down? As an investor, I don't necessarily think you should focus more on that. The next news I'm going to also look at is another one that caused a lot of confusion, anger, and also retaliation in the markets. The market doesn't like interference of governments in the affairs of central bank, because central banks are seen as institutions that need to be very, very independent. Not just independent to do whatever they like, but the independence to actually do the right thing, independent to work with the data that is available by balancing employment with productivity to determine interest rates. So when Trump said last week that he was looking to fire the chairman of the Federal Reserve, which is the central bank in the US, it caused a lot of confusion. It caused a lot of anger. It also caused a lot of, quote and unquote, vote of no confidence, on the U.S. economy, on the U.S. Policy making, institution, which is, the U.S. government. But yesterday, President Trump has now walked back his tough talking and threats to fire the president of the Federal Reserve, the chairman of the Federal Reserve, which even legally constitutionally is impossible, but you don't actually conclude, because there can be loophole here and there that the president will have used for. Now, coming back to what Trump is now saying, he said he has no intention to fire Jerome Powell, and he says at the end of the day, he's just more interested to see the chairman of the Federal Reserve to actually lower interest rates, because he believes that lowering interest rates should have actually come earlier. Is the Federal Reserve going to lower interest rates anytime soon? It depends on a whole lot of things. One, the US has to actually de-escalate, or actually start talking with China. The talks actually need to be a bit more positive, not because the Federal Reserve has any axe to grind, or has any score to settle with the president, or the US government, but because the tariff itself is inflationary. When a whole lot of goods coming into the US are going to be taxed at almost 200%. That is inflation, and that is going to really, really hurt the pockets of the average American. The cost of so many goods that still come from China will go up in almost double of their prices. So the escalation, the de-escalation itself needs to actually come as early as possible. The last news which seem a bit more positive, but it's not yet confirmed, and I will now go to the charts so that we can actually have an idea of where we need to move further. Is that in early May there are unconfirmed reports, but the report seems to be building up to a whole lot of the two positive news I've shared so far, that in early May, President Trump is likely to actually meet President Xi Jinping of China, which perhaps might be a point where the two leaders might actually put to paper some of the discussions they've had, some of the agreements, some trade agreements might actually be signed in principle, because what happens is that presidents actually have people who negotiate on their behalf. They don't necessarily meet each other to actually just negotiate. The negotiation will have started a few weeks or months before they meet, and oftentimes when they actually meet, that's when they sign maybe a memorandum of understanding or a tentative agreement that can actually further de-escalate. So if this is confirmed, and now this is where the rubber is the road, if this is confirmed, it is likely that the market will actually roar. So we just need perhaps President Trump to confirm this, that he is planning to meet President Xi Jinping, and this will actually be a huge sigh of relief. The uncertainty is still there. Make no mistake about that. And I'm going to show you a couple of charts for us to actually see what exactly is going on, how this is likely to play out, whether on both sides of the coin. So whether the escalation is going to further heighten, or we are going to have a de-escalation. What should you be doing with your portfolio? So come with me. So one of the major one of the major securities in the market that actually showed the escalation, the trade war, and the impact of the trade war is actually gold prices. Gold in the last 1 month has done about 10%, and year to date, gold has also done about 27%. If you compare this to the S&P 500, which has barely done anything. As a matter of fact, the S&P 500 year to date is down by 10%. So gold is a safety net for a whole lot of. I'll go back to that chart now. Gold is a safety net when there's a whole lot of uncertainty that is inflationary. So how do you actually now interpret this as an investor? If we start seeing a sell-off in gold, because yesterday when those couple of news, especially the Treasury Secretary, said there needs to be a de-escalation, and they are working towards that. And when we also heard that President Trump has backed off from his threat to fire Jerome Powell, gold started selling off, and gold, lost, a major number. Is now down by about 1%. And if you can see the chart, just a single day trading, we expect that if this de-escalation continues to actually build up, if a whole lot of talks between China and the US is now in the works, gold is likely to pull back. It will still, gold wouldn't necessarily lose a major value. Let me put it that way, because until we have serious negotiation, we have tentative or concrete agreements, I'm not sure gold is going to sell off drastically. So should you be buying gold? I don't necessarily think so, because gold has done a huge run off, run up since the beginning of the year, 27%. For me, what is necessary to invest in now is they are the assets that they've sold off, but to an extent, you don't want to actually wait until the trade agreements, the trade negotiation has fully started before you start buying. If you want to buy at all, you don't necessarily have to buy if you have already locked in a whole lot of stocks in the last 2-3 weeks, 1 month, when we had this uncertainty. If you've bought some of these stocks, some of this index fund like the S&P 500 index, you don't necessarily have to buy, because you will have actually bought at very good prices. But you don't want to wait, because if you wait till all the uncertainty is cleared and all the agreements is on the table, the market will have actually run so high, and you will actually be buying at a more higher valuation. The market is still very, very much, uncertain now. The uncertainty is still there. However, if President Trump, on his part, continues to tone down is aggressive and perhaps very, very harsh tone as against how he's relating to China, how the trade war is going to continue to shape up. If it continues to back down from threatening the chairman of the Federal Reserve, if it continues to actually lay out plans of how he actually wants to do the deals that he's really claiming is all about doing, we will see the markets pick up pace at a very, very, very fast rate. So that's the update. If you are an investor and you've been enjoying what we've been doing on this channel, please subscribe. Click that subscribe button now. We really, really appreciate. Put on your notification bell so that you don't miss any update. And more importantly, please like this video, because as more people like the video, YouTube will actually, share this video to more people that it will be very, very beneficial to them. So please, we will bring you more updates as we get them. But as it is now, what are you taking out of this video is that the de-escalation in the trade war, talking, the aggressiveness, the very, very antagonistic atmosphere is now clearing. Is the storm over? Really, the storm is not yet over, but it seems the storm is not as powerful as before. So, as an investor, do not actually invest with fear and uncertainty. You need to actually see beyond the noise and actually see what is going on. What is going on now is that we are getting to the tail end of the negative sentiment and all that, and the market seems to like that. So that's how I will close it for now. Thank you so much for joining us, and till when we meet, keep investing, keep growing. Take care and bye bye. I'll see you in the next one.